Okay, so I'm back. I think a couple of people have joined, so it was worth it to give some more people time. However, I'm going to jump directly in and look at different things. I'm going to start off from the fundamental landscape. Um, I think financial markets, how I think about financial markets from a fundamental perspective is it's too simple and at the same time it's too complex. Why am I saying it's too simple and too complex? I think it's very, very simple to understand the different cause and effect relationships of fundamentals. You know, like if you move rates up, you're likely to tamper with these assets. If you do this other thing, you're likely to tamper with this. However, it's also very complex because the cause-effect relationship sometimes tends to work in a very, very different way from what you think. For example, there are times you may be assuming that by raising rates, you're likely to tamper with markets, but you may find markets are stronger than you think. Why? Probably the economy is stronger than rates are rising, so markets will still keep on moving higher, unlike what you may assume if you're looking at the normal fundamental landscape, you know. So coming to fundamentals, first thing, in 2021, 2020, I think for you to understand fundamentals, again, it's very, very important for you to spend some time looking at historically the different themes that have shaped markets, okay? We start with the era of 2020 during the COVID crisis. That was one punchline in the markets. We had a 35% collapse in the markets like NASDAQ and Dow. S&P was also in that category. Then we came into the inflation eras of 2021, 2022. Coming to the end of 2022, we moved from inflation to hiking rates and fighting inflation. So those two are working in tandem. And then officially, we are now coming into a period where rates are likely to be, this cycle to the upside is likely coming to an end. Or probably even if we have 2 or 3 more hikes, I think the move to the downside on rates is probably the better bet right now than the move to the upside. If you think about how many basis points are remaining to the upside. So this week we have a couple of news releases. One, we have Fed's interest rate decision, 9 p.m., and the conference at 9:30. Obviously, this determines what happens to the dollar. The dollar has been getting weaker despite rates being this high. Why? I think the trade was quite far-fetched. I think when markets are rising to 112, 115.5, where we topped, I think we topped at 112.5 actually. Markets had already priced in about a 5.5% rate hike. I think there is no surprise with where rates are. I think the only thing is how fast it happened. No one thought it would happen that fast. On Thursday, we had ECB interest rate decisions. So 4% is where we currently are. Markets are pricing in a 25 basis point hike. If we get 50, probably it's a surprise. If we get less than 25, probably a surprise. Same case to the Feds. I think if we get no hike, it's a surprise to markets, similar to if we get a 25 basis point hike is priced in. A 50 will be too aggressive. No hike would be too much of easing. So I think markets will really jump higher if we never got any hike. Then on Friday we have BOJ, interest rate decision. I think this is the only bank during this cycle which has left rates at negative territory. All the other banks have come from very low interest rates to high interest rates to combat inflation. Japan has had a very, very different story. So currently their rates are still at negative 0.1. They have a new central bank governor who's likely to come up with changes in monetary policy. However, from the previous meetings, we've not gotten any signal of a potential change in monetary policy. Probably this meeting could be the first one. So we're still watching to see what will happen. So those are the main indicators that we're watching for this week. We don't predict, we always prepare for markets. So whatever ideas I have are based on probability distributions, and probably I won't trade based on any opinion I may have on what will happen to different asset prices. Instead, I'll still stick to price action and the pattern that I look at, the entry strategies that I use. So I'll simply stick to the technicals, but I'll have opinions on what the fundamentals are doing. And that will help me know when I'm right using the technicals and when to press hard and when to stay out of markets. So I think for me, likely we're going to see a hike from the Feds. I think the US economy has shown quite some resilience. We've come up from the narrative of having a very, very hard landing to probably us getting a soft landing. If you track markets, you've seen the Dow come back to as high as 35,450 for today. So we're approaching 36. Think about 36,000. The last time we saw those highs were in 2021 during the inflation highs. In 2022, we saw a minor correction. Well, it looks like markets are again back to the bullish area territory. So it looks like we're going to have a bull market again. The US economy is still no negative growth. So we've still not seen a recession. Probably we'll have a mild one, who knows. But as of now, markets are showing a lot of strength, which means we're likely to keep on moving higher. You just look at price. Don't think so hard about what is likely to happen unless you have a system based on thinking. But if you have a system that relies on watching what price does, then just focus on watching price, because when it turns, it will tell you you've turned, So you don't need to be really smart around that. Then I think the ECB is likely to keep on hiking, just like they have always done. I think for the last few meetings they've been hiking. They're at 4%. Probably we'll see at 25, 50 basis points. The last time we saw a 51, surprising many. This time market surprising in 25 basis points. So let's see what will happen. And then on Friday, I think BOJ will leave their rates unchanged. All these things don't really matter. I think what really matters is how you think around price action based on what is likely to happen around these different things. And I think that's what I'll move to next. And I'll rely on price action, but also interpretations of different things that are likely to happen in the market. So the first market that I'll look at is the gold market. For the last couple of days now, gold has been sliding lower for about 3-4 days. But we had a move from 1900 to trade as high as 1987 for the last 2 weeks. Then we had this slide lower for the last 3-4 days. So if I look at it from the weekly perspective, I'm still very bullish on gold. I think with what is going on in different places geopolitically, the risks of the dollar collapsing and the rise of BRICS, this other economic region, there's a tendency of central banks to really hold on gold during such uncertain times, including periods of war, especially during Ukraine and Russia. And gold has shown a lot of strength. With rates at 5.5, gold is still trading as high as 1960. Okay, so 5.25 is actually, gold is inversely related to interest rates, because it's mainly used when rates are very, very low. That's when people use it to hedge against inflation and such things. However, this time, despite high interest rates, gold has really given us some strength. We expected corrections to the levels of 1500 probably, but we never got anything of the sort. Instead, prices have moved sideways between 2000 and the 1700 level, as you can see on my chart layout. Okay, so you can see ever since 2020 when you had this top, we've been moving sideways between these two levels. So what do I expect? If we break 2000 level, which I really think there's a high chance we will do, I can easily see markets tapping 2100 and probably even 2300 on the upside. Okay. However, if we remain below 2000 level, I'd only turn to bearish, significantly bearish, if I saw a good close below the 1900 level. As long as prices are remaining above 1900 level on the weekly chart, I'd want to be bullish. I'd want to be looking for prices to go higher based on the different indicators that I use. On the daily chart, I have a different pattern formation, which gives me a clearer distinction of what to do. So you can see we have 1, 2, 3 bounces there. It looks like we've gotten a rally to the upside. Currently, looks like we're retesting 1950. If we stay above this trend line, if we stay above this fair value area, then I think we could tap 2000, a break of 2000, and we could be looking at 2050 and 2100. Okay, those are the levels that I'll be watching in this market. I think a break of 2000 will spark a significant bull move on gold, because 2000 has not been taken out for quite some time. And I think, unlike what most people think, when a market makes a new high, it's likely to keep on moving higher. And when a market makes a new low, it's likely to keep on moving lower. Basically, momentum is likely to keep on moving in one direction until a significant force happens to take it to the opposite direction. On the 4-hour chart, I'd want to be a buy at 1950 this week. If you get a move back to 1950, I'd want to be a buy if we get a significant bullish signal. I'd be looking for a move back to around 1975. Take out 75, I'd be looking for 87 and probably the 2000 level. So those are the levels, those are the ideas that I have on this particular market. If none of that happens, then you can be sure I won't take part in this market. So oil is another market moving significantly higher. If you look at it from the weekly perspective, for a very long time, oil has done nothing. I think for a couple of weeks, since December, the first 6 months, oil just traded between 70 and 80. However, it looks like we've gotten a significant bull move from 70. We've taken out this trend line. If we get a good close like this week, I think if we close above 80, I'll be looking for 90, probably 95, 92.5 on the upside. If I go down to the daily chart, you can see prices have taken out that trend line. We've now approached at 3 on the daily. The move from 70 has been quite strong. So we could probably see 85 if we close above 80. But if we reject 80, you could see a correction 75 before our markets continue moving to the upside. On the 4-hour time frame, last week I had this long setup. I didn't hold it all the way to that precise target because that move took place this week. So I exited this trade with about 1.6% gain. I was to make about 2.6%, so I left about a percentage on the table. But you can see prices eventually took out 77.5, took out the R2 level, and now it looks like we're approaching the $80 level. So I'm watching what price does there. If you reject the level, you could come back lower slightly, then you continue. However, if you take out the level, then I'll be looking for potential longs going into next week when markets will be coming back lower. So the Dow has been one interesting market. I think many people thought inflation wouldn't come down. There was this debate of it's hard for inflation to go down below 5 that fast. Now we're at 3. It's a surprise to very many people and a confession and a true testament of the fact that economics is truly unpredictable and you can't make any money relying on predictions. So clearly looking at the Dow, you can see we are back close to the levels that we had back in 2022 January when markets created new highs at 36,500. We've gotten a move to the downside to 29, then a move to the upside. This could be the first stage of a bull market. Currently, we're approaching 36,000. I think there's a very high chance we'll tap that level. If we tap the level, we could see a double top rejection, probably the start of a collapse. If we break past 36,000, who am I to say where we're going to stop? I'll be looking for 37,000 and probably 38,000, which is this level. I don't think I'm ordained to try and predict where markets are going. So 37, 38 will be on my radar if we take out 36. However, if we remain below 36, I'll be watching what price does, how price develops to see if I should pivot to shorts, at least for the short term. On the daily chart, there was this beautiful move from the fair value area at 34,000. Now we're trading all the way above the R2 level, so we're likely to visit 36,000 level. Clearly, this candle close suggests that price is still likely to move to the upside, so I'm still very bullish on this market. I think 36,000 could be attained. And on the 4-hour time frame, if I just click on the 4-hour time frame, you can see clearly markets opened around R1. However, we've closed. It looks like we'll close above R1 level. And if we close above this level and 35,500, I see no way that we won't get to 36,000. I think there's a very high chance we'll tap there. However, if we spike R2, we could significantly come back lower to 35 before we continue to the upside. I was looking for a buy, potential buy at 35. Clearly didn't come along, but I was looking for a good buy around this area for potential move to the upside. The next market that I look at is the NASDAQ. This is 100 of the best tech companies in the US. So very huge names here. Microsoft, a couple of big names trading around the NASDAQ. Okay, so if you look at it from a weekly perspective again, so if I just go to the weekly perspective, last week we had some bearish close around the 15,500 level. If markets start coming back down, you could easily visit the 15,000 level. Okay, on the daily chart, markets have bounced off, bounce 1, bounce 2, so we're likely to see a move to the downside, 15,500. I think we could easily see 15,000, but I'd want to first see a close below 15,250, which is this level. So still watching if price will visit 15,250. If you visit 15,250 and you have a clear signal, I'll be a buyer looking for, first of all, 15,500, 15,600. I'm probably looking all the way for 16,000. I still think we're in a bull market. I don't think the move to the upside is over. I tend to consider this as corrections, especially when it comes to these stocks. Next, I look at euro dollar. The dollar has also been losing ground lately, coming back from very significant highs to trade significantly lower. So on the weekly chart, if I just look at the euro, you can see clearly we took out 1.1. It looks like we're going back for a retest. Last week we had some bearish momentum. This week we can see some continuation. So I'm looking for a retest of 1.1 before we continue to the upside, probably to 1.15. Okay. So if I look at it from the daily chart, you can see clearly prices approached R3, rejected 1.1250, started moving lower to 1.1. If you see 1.1, you could bounce and you could start moving to 1.15. I think I'm very, very bullish on the euro, by the way, and very, very bearish on the dollar. On the 4-hour chart, I'm looking for I was looking for a potential move back here for a sell-off to 1.1 before the continuation. However, you can see the sell-off came very, very fast during London Open today. So I was looking for this move, then a continuation. However, you can see the move to the downside came fast. However, if you were to get another move extended to the upside, I'd still sell again back to 1.1. However, if you get a move to 1.1, I'd tend to avoid this trade even if it came along, because I think the basic idea is looking for this move back to 1.1. On the pound, if I look at it from the daily perspective, you can see the pound has moved again all the way from the 1.3125 level to trade as low as 1.2830. So losing some ground there. After a couple of bullish days, you were followed by a couple of bearish days. On the 4-hour time frame, if you look at what price action is doing, you can see clearly we had some significant bull run. Then we started seeing a collapse and we've seen a serious one. I think last week we saw a very big move due to inflation numbers in the UK coming out and a possible change in the monetary policy. So you can see markets came back lower. We're not trading around the fair value area, S1. So if we come back to P, we'll see this move probably to 1.3, then a drop. However, we could also see a drop, then a move to the upside. So just watching keenly to see what will happen with price around these two levels. So 275, a very good area of interest for buying. 30, a very good area of interest for selling. So a very good diverse setup that is likely to come out of those two lines. If I look at euro yen, this is the only trade I think so far I'm holding. If you look at it from the weekly perspective, the yen has been moving significantly higher. Last week we saw some significant bullish momentum, so you can see how prices closed. We're likely to see these markets visiting 160. I think I'm looking for a potential move to this one, 161.69, probably 165. But honestly, we're very, very, very close to a top and probably the start of a correction. So as much as I'm a buyer short term, I think we're very, very likely to see a sea change in direction in this market. So for a very long time, we've moved higher, I think ever since last year. And I think we're likely to start seeing some shifts in supply and demand. So this is bounce 1, bounce 2, bounce 3. We're still trading around the R1 level. So I'm looking for this market to tap at least 160 before the end of the week. On the 4-hour time frame, the basic idea I have is I've bought around the 156.5. The good buy was at 156.25. So you can see this was the liquid level. I bought in London. This move came in New York. So it was actually better to wait, but I was already in. However, we started seeing a move higher. If we come back above fair value area, then I'll be looking for R1, R2. I think there's a very high chance we could actually tap there 160. Especially if Japan keeps rates unchanged and the euro area probably hikes rates by 50 or 100 basis points. If you get another surprise from the euro area, then I think the Japanese yen is likely to lose ground against this market. So those are the main markets that I personally trade. Those are the markets that I have good ground on what is going on. The last market that I can look at is the dollar. The dollar is inversely related to the euro, so probably the same idea with what is happening on the euro. So you can see the dollar started a huge collapse. Look at how beautifully it finds support at the $100 mark, starts coming back up. So we're just waiting to see how far this correction will dip. I think 102.5 is a very, very critical level to watch. So I think they could easily see a dip to 102.5 before markets continue moving to the downside. So I think a correction to these levels will not surprise me at all. However, we could also reject this level and continue the move to the downside in line with momentum. On the forward chart, I can see clearly where price is opened around this level, so we're likely to see a move back area to the fair value area before we continue to the upside. But you could also easily see a move to the downside, taking out P, moving to 100 and probably even trading lower. So those are the different distributions I have for the different asset classes. It's upon you now to know the areas where profitable opportunities lie. By profitable, I mean asymmetrical risk-reward ratios, and probably also the idea of markets which have a high probability of playing out, or setups which have a high probability of playing out. So unless there is a question, I will stop there for today. So any question? Let me check a couple on YouTube. So someone is asking, do I think prop firms could become bigger than academic writing and a source of livelihood to those who practice good risk management and with the right trading skills? Yep, and I don't think prop firms are likely to become bigger than academic writing. I think prop firms have always been bigger than academic writing. I think prop firms have always existed in the US. The only thing that has happened is we've moved from prop firms which are more physical companies where you go to the office to now remote sort of prop firms whereby we have people now paying up for challenges and trading, from their bedrooms, but still trading prop firm money. So I think there's an opportunity there if you know what you're doing, and obviously if you practice good risk management, just like you've said. An opportunity to make some good money there, probably 10, 20, 30 million for yourself exists if you know what you're doing. Another question. So someone is asking, how is my prop firm account faring on? Faring on very, very well. In fact, I have 2 running trades right now. I have exposure on Euro Yen. I also have the other account that I'm taking up the challenge. I did a video which is supposed to air this week, so you'll see the updates on the 2 different accounts. But the account is faring on very, very well. I'm very, very happy with my trading. I think for this month I'm up about 3.13% with the 2 trades that are running. I could probably jump to 5, or I could jump back to 2% depending on how the weekends. So those are the things that I'm watching. So someone is asking why you're not scaling to 300k MFF. I'm scaling. Just taking up my time. I always like saying one challenge at a time, and also grow slowly into this account sizes, because if you think about it, you're trading 1%, but I think the terminal figure is very, very big. If you have, like for me now, I'm at $75,000, so a percentage for me is about $750. If I move to 300,000, I think a percentage will sit at $3,000. So something I'm working towards. Probably in the next few months, you'll see me with the account, especially now that we don't have the time constraints for most of these prop firms. It will be easier to take up the challenges. So I'm still planning on taking up the challenge, only that I've not done it, but I'm scaling up step by step. I think I have a concrete plan on how I'm going to scale up. So let me see if there's any other question on the Zoom. Okay, so I can see a couple of questions from the Zoom side. Let me answer some of them. So can you highlight the process that you use from stocking the market to journaling your trades kindly? I think for this one, honestly, for me to highlight the whole process, I think you'd have to sit in one of our classes or at least forums, because it's a very, very complex process, and that would actually be a whole Zoom session. So I think for this session, let me not just go into it. It's a very, very simple process, but again, very complex, because I have the breakdowns, I have the journaling, and I have the review of the trades that I've taken. So those are three different processes which are all done concurrently. So I'll go into that some other time probably. By using CNBC News, can one execute based on what they provide? No. CNBC News has no hit rate. CNBC News has no risk reward. CNBC News has no skin in the game. They don't take any risks. Their job is to report what markets have done, not what markets are likely to do. Always they will be backward looking, but as a trader, you'll always be forward looking. By the time they report that something has happened on CNBC News, the move is over. So before they say gold is above 2,000, real speculators bought it at 1,900. Those who are watching the news will get the reports when it's above 2,000. So I don't think you can be profitable trading based on news, but I think you'd have to devise a method based on such things. So I personally don't believe or advocate for such ideas. When do you cut down your risk in a prop firm when in drawdown? So for me, I've kept it at half the cap of the drawdown level. So if you have a MFF account, for example, like me, that means you have a 12% drawdown limit. I think you should cap your risk at 6% and increase your chances of maintaining the account rather than giving back the money that you've made. I think since I started trading my account, the worst drawdown I have had is 6.7% on the MFF account. That's the deepest I've ever gone. And the reason for that is always as I'm approaching 6, I tend to cut my risk significantly. So it's very, very important to cut your risk significantly when you start losing money. So any other question? Okay, so I can see there is no question because I don't see anyone posting a question on the chat room or asking. So I think I'll stop there. For those who came in late, the recording is on YouTube, so you can just hop on YouTube and watch. For those who have watched through everything, I hope you learned or picked up one or two things. And I'll catch you guys in the next one. If you're interested in learning how to trade like us, visit us at our office, Lavington Mall. Let's have a chat, let's talk, and see how we can do business. So see you guys, catch you guys in the next one.